The economic implosion continues in Canada, and Canada is seeing a massive amount of foreign capital flee the country because of the deteriorating economy. So let's get right into it and see what's going on. So Canada sees domestic and foreign investors pull out at record pace. Canada has historically had a reputation of a safe haven for global investors, but those days are suddenly gone. And we talked about this last week and its effect possibly on the Canadian dollar. And we'll get into that more later in this video. Statistics Canada released its securities trade for February. The data revealed global capital continues to flee the country's capital markets at record pace. Even worse, domestic investors are now joining them. So people in Canada are starting to wake up and realize there's nothing investable in Canada anymore as well, and they're looking at other countries. I mean, it makes sense because really the economy in Canada is in a very bad place. Canadian investors are sinking records amount of cash into foreign bonds, into foreign markets. Investors bought $24.2 billion in foreign securities in February after sending $7.6 billion in January. Most of the capital was sunk into foreign bonds, setting a record. And then you can basically see here Canadian investors are sinking record cash into foreign bonds. You can see on this chart, I mean, this chart goes back all the way to 2019, and you're just seeing a massive spike. So more and more capital is just leaving the country. So the US was the biggest winner of Canadian chasing foreign investments. In total, a record of $16.3 billion in foreign bonds were purchased in February. American bonds represented $9.1 billion of that flow. That was on top of the $9.1 billion in US equities purchased by Canadians in the month. Now, obviously, with what's going on with the stock market in the US, that is no surprise that you're seeing a lot of people invest where you're near these all-time highs. That's always the case. But also going into treasuries, going into US government bonds and securities. I think that's a good thing. Short-term T-bills are not a bad option at all. That dollar income is becoming more and more valuable. As you see, this sort of dynamic always plays out with foreign capital heading into the United States during times of economic turbulence or during times of war like we have right now. So anyway, very interesting what's going on. So foreign investors continue to flee Canada, anything but loonies. Canadians weren't leading the trend, but joining the global capital flight from the country. Foreign investors dumped $8.8 billion worth of securities in February. This follows an unusually busy period of divestment over the past 3 months, amounting to a $31 billion sell-off. And we were talking about how it was record last time when we covered this, and now it continues to go. I mean, look at this chart. It is absolutely crazy. And you can see how it's just literally dropped off a cliff. The outflow net has just dropped off a cliff here. I mean, it is just insane. And what we've seen happen is the Canadian dollar selling down to the lows in that range. We had retail sales data that came out today as of filming this video, saw a massive decline, again, just showing that the economy is worsening. If you go to a weekly chart here, we talked about this the other week, but you have the Canadian dollar that is sort of just in this range. We sort of bounced off some of the lows down there, but we've just been back and forth in this range. It's not a good thing when you're down at the lows here, because negative data could send you through the lows, and if you break out of this range, who knows where we're heading down to. I said about the 2022 low here and the 2020 low. Those lows could easily be broke. So let's get into what happened with retail sales. So retail trade, February 2024. Retail sales decreased 0.1% to $66.7 billion in February. Sales were down in 5 of 9 subsectors and were led by decreases at gasoline stations and fuel vendors, minus 2.2%. Doesn't make a lot of sense, does it? Because that's kind of a necessity. So seeing the slowdown there is showing that maybe people aren't just traveling. That discretionary travel that people normally do, they're not doing so much because gasoline prices have gone up so much. You've seen obviously the carbon tax just go up and up and up and up and up. It's now representing a large chunk of the amount of money in fuel prices, and anybody who drives a lot is not going to be getting enough back from the rebate. They're going to be losing a lot of money essentially. Most people, in fact, are going to be losing money even with the carbon tax rebate. So it's interesting what's happening here with retail sales. Obviously, retail sales isn't even adjusted for inflation. If you adjust this for inflation, it gets even worse. Just think about it, guys. I mean, it is crazy to think how bad this actually is. And then when you look at the sectors and where it's actually going up and down, so motor vehicle and parts slightly up. You look at building material and garden equipment, supply dealers down 0.4%, food and beverage retailers flat, furniture, electronics and appliances down massively 1.5%, general merchandise retailers up, health and personal care retailers up. And I'm guessing general merchandise, you're going to have stuff like food that will fall under that category. And then you've got gasoline stations and fuel vendors down 2.2%. Then you've got clothing and accessories still down -1%. Might be a good time to look at buying some clothes, probably some deals out there right now. You've got sporting goods and miscellaneous retailers down as well. So the variations are pretty substantial. And if you look at what's going on by industry on this chart, you can see where the major decliners are. So you've got other motor vehicle dealers. That was down massively. Somebody let me know what that is in the comments. Obviously, it's not new car dealers or used car dealers. Is that auction houses, things like that? Because that would basically spell trouble for these guys coming. So it's really interesting what's happened there. You've got parts and accessories down. This is year over year, by the way. You've got convenience retailers and vending machines. That's down. You've got beer and wine down. But funnily enough, I highlighted this cannabis retailers up. So it's almost like the people buying beer and wine just went straight to buying cannabis because one is up, the other is down by very similar amounts. So then you basically got furniture, home furnishings, electronics and appliance retailers down. You'd expect that with the housing market, everything that's going on there. Furniture retailers down massively. Floor covering, window treatment and other home furnishing retailers down a huge amount, 9.1%. Again, you'd expect this with the reduction in speculation and what's going on with the housing market right now. You've got gasoline stations, which they covered, clothing down massively. When you really go into it, it's mainly clothing and clothing accessories. It's not shoes. It's not really jewelry either. In fact, jewelry was actually up along with luggage and leather goods retailers. You've got sporting goods, hobby, musical, instrument, book and miscellaneous retailers down massively. So a lot of the discretionary spending is down, down, down. So that doesn't tell you good things. In fact, if you actually dig into the nuance like we are with this report, you can see through it and see that it's actually much worse than that headline number even tells you. Because when you think about the increase in food prices and stuff like that that is consistently happening, well, that is going to impact retail sales, making it look better than it actually is, when obviously people are just allocating more money to that, less money to all these other areas in the economy, and they're going to suffer as a result. There's a lot of jobs that are behind these sectors. Remember that. So it has a lag effect, but will impact, obviously, the labor market. And when you look at what's happened over the past year, it's been very turbulent for retail sales ex autos. And then basically you can see, obviously, consumer confidence is completely down the toilet and collapsing, as you would expect with everything that's going on here. I mean, we're already in recession. We're going into a depression. If you haven't realized, you're waiting for the government to tell you that you're in a recession. It's going to be too late to prepare by then. It's already too late, in my opinion, to prepare now. I've been saying prepare for years for what's happening now. Consumer spending is completely flat as well. I mean, that literally tells you that we're in a recession. I mean, it's literally the public sector numbers that are just propping up everything right now. It's just a complete facade, this whole economy. The economy is imploding. Anyway, guys, if you've enjoyed this video, I'd highly recommend you check out this video from last week. And if you're looking for a VPN to get around all the censorship laws in Canada, go to expressvpn.com/market mania, the fastest VPN that you can get your hands on. I will see you in the next one. Take care, guys. Bye-bye.